Following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on the TFNN Radio Network. The number to use to get through to me, give me a call, 877-927-6648. There's a lot moving in this market. If you have questions about an individual stock or the market in general, give me a call, 877-927-6648. Reminder that my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. I'm on Channel 1 and Tiger TV on the homepage of TFNN.com. If you're listening on the PC, you can watch Channel 1 and Tiger TV, and you can see firsthand the charts that I'm talking about. You can see them live there. You can also get my show anytime on iTunes if you can't listen in the middle of the day or in the afternoon on the East Coast. Just go to iTunes. You can do a search for Breakout Investing with Ken Shreve. Get the show that way. And another way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi, and you can get the stream 24/7. I currently own 13 stocks in my Ultimate Growth Stocks model portfolio. I've been busy putting money to work in recent weeks. Ultimate Growth Stocks, again, is my model portfolio and newsletter that I launched recently at tfnn.com. You can get a 2-week trial. Right on the homepage, just go to the newsletters tab right at the top of the page there. Click on investment newsletters and you can get a trial that way, or you can find me right in the carousel on the homepage. So Ultimate Growth Stocks, and I publish that letter once a week, every Tuesday, with email buy and sell alerts in between. I do a comprehensive update every Tuesday with my thoughts on the market, watch list update on current holdings, and then if I take any actions in the portfolio, I send out email, like I said, email buy and sell alerts in between. I've been dabbling in a lot of different sectors. Bought a railroad stock recently, some technology names, retail names, healthcare. That's what I like about this market right now. Obviously, a lot of stuff is going up, and the leadership has been fairly broad-based. You're seeing it in a lot of different sectors. That's always a good thing. Of course, we can always complain about the volume. We're in the summertime, but sector leadership looks to be fairly broad-based right now. So turning to today's market, we've got about 50 minutes or so left to go in Thursday's session. Let's see where we're at here. We have the NASDAQ outperforming. That's been a common theme in recent weeks. It's up 43 points, 1.5% to 2877. The S&P 500 is next, up 16.5 points or so, 1.2% to 1355. And the Dow lagging a little bit, not too much, up 119 points thereabouts, 0.9% to 12,744. Looking at a chart of the S&P 500 currently, remember it wasn't too long ago we were looking at the resistance level of 1345 for the S&P 500. Well, that quickly went away. The S&P blew through that level of resistance. Now 1370 is definitely in play, and that's its 52-week high. So we'll have to see what's going to happen with the S&P 500. But a strong day for the bogey. Let's take a look at the NASDAQ composite. Again, we were talking about resistance on Tuesday at 2835. That was not an issue for the NASDAQ. Again, NASDAQ right now trading at 2877, so it's past that area of resistance, and all of a sudden its 52-week high of 2887 is in play. So definitely the major averages acting strong. If my math is correct, out of the past 18 sessions for the S&P 500, it's up in 14. So 14 out of 18 for the S&P 500. The NASDAQ is working on 8 in a row today, or 11 out of 13. So a lot of people out there waiting for a pullback. It's really going to be interesting. Obviously, the jobs report looms very large on Friday. Tomorrow, we did get some good economic data today. Private sector employment rose 157,000 in June. That's according to the ADP employment report released earlier today. That was more than double the 70,000 increase expected by economists. I think what you're seeing in the market, right now is obviously confidence, optimism about a good jobs number tomorrow. In fact, the estimate is for non-farm payrolls to rise 80,000. The prior month we had a paltry 54,000 increase in jobs. So I think the thinking is that there's a pretty good chance we could see a 125, 150, maybe even a little bit better than that tomorrow. How is the market going to react? Well, that's the million-dollar question. There's a lot of different scenarios that could play out here. Of course, it's possible we could see a disappointing number. That wouldn't be good if we see a number of 25,000 or 50,000. I'm sure the market's not going to like that. I don't think it's likely. We could see a better than expected number and sell the news. Okay, I think that's probably a more likely scenario. Although I really don't have any idea how the market's going to react. It's tough to kind of predict that type of thing. But you have to think 8 days up in a row for the Nasdaq. A lot of good news has been priced into this market quickly. What I do know is that there's still a lot of money on the sidelines. We've seen a lot of low volume gains in the Nasdaq, in the S&P 500 recently. I should mention that volume today on the Nasdaq is tracking about 15-20% higher than Wednesday's levels, but even at this point, if things stay the way they are, we're really looking at just an average volume day on the Nasdaq of about 1.9, maybe 2 billion shares. So even though it's on pace to come in higher than Wednesday Nasdaq volume, still, there's not a big push in volume today. Volume on the New York Stock Exchange, we had how many shares traded yesterday? About 750 million shares. That's below average. NYSE volume is about 1 billion on a daily basis. So volume on the New York Stock Exchange today is tracking about 5 to 10% higher than yesterday. Still looks to be below average. But listen, the market tide is flowing positive. There have been several breakouts in recent weeks. I've been waiting for them. I've had several in my Ultimate Growth Stocks model portfolio. There's a lot today that we will get to, but let's just take a look at a couple of headlines. In the first segment, take a look at gold today, up $1.40 to $1,530.60 an ounce. And like we usually do, we'll take a look at the GLD, the Spider Gold Trust. See where that's trading, up 0.2% right now to 149.22. Its technical picture looks a lot better than it did a few days ago. It is back above its 50-day moving average. I still look at the GLD as technically damaged right now. You can see some resistance in the chart at 152 thereabouts. So I think gold is going to have a hard time making headway. I know there are a lot of gold bulls out there still. Gold has been in rally mode or the GLD has been in rally mode for 3 days now. Again, recently up 31 cents to 149.22. Oil up $2.02 or 2.1% to 98.67 a barrel. Oil has been in rally mode lately. Let's take a look at USO. This is a popular oil ETF, the most liquid, I would say, probably the most popular, the United States Oil Fund, recently trading up 1.9% to 38.62. You can see still below its 50-day moving average. A lot of technical damage done to the USO in recent weeks. The USO basically tracks the performance and price of crude oil. It consists of futures contracts for different oils, gases, and petroleum-based fuels. But like I said, it is the most liquid of oil ETFs, and it is widely followed. So, okay, let's take a look at some headlines today. President Obama met with congressional leaders today about cutting the deficit and, of course, raising the debt ceiling. He called talks very constructive, but said that both sides remain far apart on issues. Another meeting is scheduled for Sunday, so Republicans and Democrats are going to try to sort that out before a lot of bills come due on August 2nd. In other news, the Eurozone debt crisis did not stop the European Central Bank from raising interest rates for a second time this year. Central Bank raised its benchmark rate by 1/4 point to 1.5% at its meeting in Frankfurt. Interest rates probably not going higher anytime soon in the U.S. The Fed has said as much in recent meetings, not with unemployment where it's at and the housing markets where it's at, but for sure economic data has improved markedly in recent weeks. I mentioned the private sector employment report earlier today from ADP came in double expectations. That's fueling hope for a pretty decent jobs number tomorrow. But remember, when we get these monthly jobs reports, we're really going to need to see job growth of probably 250,000 on average a month. To really feel comfortable about that the economy is really starting to pick up. So there's a chance we could see that in coming months, and I'll stay optimistic that that's going to happen. But hopefully we'll get a good number tomorrow, and that will be a start of sustained improvement in the jobs market. Also today, weekly jobless claims fell to 418,000 last week. That was a bigger drop than was expected, and also good news, the estimate was for a drop of down to 425,000. So jobless claims fell all the way down to 418,000. Still above that 400,000 level. I'd like to see that get down sub 400,000 in coming weeks, but a good number there as well. And if that wasn't good news enough, well, the U.S. retailers came out today with same-store sales. The vast majority, most of them, posted better than expected June sales. Big winners on the day included Target. Shares, we'll take a look at Target real quick. That's TGT on the New York Stock Exchange. Shares of Target having a big day today, up 7.3% to 51.96. You see Target has really been taken to the woodshed in recent months. Really has been a poor price performer, still below its 200-day moving average at 52.60, but stock gapped up today on better than expected numbers. We also had good numbers from Urban Outfitters. Shares recently trading around 32.85, up nearly 7%. Kohl's up 7.4% to 55.95. Gap has had a lot of problems executing in recent months, but their same-store sales came in better than expected. Shares up 5.5% to 19.34. And one of my favorite retailers, we'll take a look at Macy's here, because I think out of all the retailers I just mentioned, Macy's has perhaps the best looking chart of the bunch. We'll take a look at Macy's here. They also had good sales numbers, a good outlook today. Shares were recently trading around 30.34, up 5%. And again, out of all the retailers I just mentioned, I think Macy's looks the most solid technically here. You can see the stock recently cleared some resistance at $30 a share, recently trading around 30.47. So I just think this one is still within range, and just a well-run company here that is firing on all cylinders right now. When we come back, I want to take a look at some earnings reports I flagged earlier in the week. Earnings from Helen of Troy, High-Tech Pharmacal, and also PriceSmart. Very strong numbers from each one of these companies. All three stocks having a very good day. And we talked about a lot of breakouts in recent weeks. A lot more happening today. We'll take a look at some of those too. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Ken Shreve with you. Breakout Investing with Ken Shreve on the TFNN Radio Network. Let's go to Dominic in Fort Worth, Texas. Wants to talk ticker symbol TAOM. Dominic, how are you?
Hey, greetings, Ken. Good afternoon. Ken, first of all, I want to compliment you for being ahead of the curve on the action on the market. In fact, I had actually two questions. My first one, actually, besides the ticker symbol, was on the June 21st follow-through day. Because even your predecessing organization didn't even touch upon it. I just wanted to know, just to describe the action on that day, and also my other question was on the symbol TAOM.
Okay, well, I'll tell you what. That's a good question. Let me go ahead and pull up a chart of the Nasdaq, and then we'll take a look at TAOM, which is a very interesting China IPO that continues to act pretty well in the market. Okay, so I have a chart up here of the Nasdaq, and okay, so June 16th, the Nasdaq hit an intraday low and then rallied off its low and managed to finish in, looks like just barely the top half of its range, and there were buyers that came in there pretty late. And I had a lot of growth guys, talk to me soon after that time saying, well, in how to make money in stocks, Bill O'Neill says, you want to look for a follow-through day on day 4 or later of a rally attempt. So if you call June 16th the first day of a rally attempt, because the NASDAQ finished off its low, you actually had arguably a follow-through day on June 21st. Now, it was a tough follow-through day to recognize because a lot of people said, well, wait a minute, that was only the second day of the rally attempt for the NASDAQ, and you're not supposed to pay attention there. So the way I've explained it, IBD explained why they did not call June 21st a follow-through day. The NASDAQ was up 2.2%. Volume was there. But I heard other people say it was because if you look at June 16th, again, the fact that the NASDAQ rallied off its low, there were buyers in there late, that could be arguably the first day of the rally attempt. So as I wrote in my update, Dominic, on Tuesday earlier this week, it's really semantics at this point because right around that time, even though I wasn't ready to call it a follow-through day either, my growth screens had really started to perk up at that point. And June 22nd, June 24th, June 25th, June 26th, the list of stocks were getting bigger and bigger and bigger, and all the while I was putting money to work in the model portfolio. So I was saying, okay, technically I haven't seen a textbook definition follow-through day yet, but my screens are telling me to buy, and so I was buying. So that's generally my take on that. It was not an easy call to make for IBD on June 21st. It was not an easy call to make because it was just a questionable follow-through day.
Well, you were ahead of the curve, so I compliment you on that.
Thank you. Okay, so you wanted to take a look at TAOM is what you wanted to look at. I think it's Taomi Holdings. Okay.
Yeah, correct.
Yeah, this is a company that came public. It looks like about five weeks ago. Small company with a market cap of $417 million. They do something very unique in China. They're a provider of online entertainment, basically for children in the country. And what I like about TAOM, Dominic, I'm sure what you like about it too, is that it is showing really solid earnings growth and sales growth in recent quarters. Valuation-wise, it still seems reasonable, selling at 14 times trailing earnings. Fundamentally, it looks really solid. Technically, there's a lot to like about it too. At this point, shares trading around $11.16. Its prior high is $11.34, it looks like. So, I mean, this could be on the verge of a technical breakout, which is exciting. I really can't see anything wrong with the stock here, other than the fact that it's small. I mean, it's a tiny company, only a market cap of $417 million. That's a little bit below the threshold I look at, but the positives seem to outweigh the negatives here for sure.
Well, hey, Ken, thanks for your insight. You have a wonderful day.
Okay, thanks a lot, Dominic. Appreciate it. All right, let's go to Joe in Boston, who wants to talk about WNR. I think I know that ticker symbol. It's an oil refiner. Joe, how's it going?
Good. You, Ken, how's it going?
Everything's good. Appreciate it.
Good. You're on fire, just like the heat in Southern Cal, huh?
I was telling Tom on his show yesterday that we're not used to getting humidity here in California, but it's been tough.
We get it in Boston.
Yeah, I know. Well, I'm originally from the East Coast, so I've had my share of humidity, but not used to it out here. So Western Refining.
Yeah, is there enough volume there to consider that a clean break, or is that kind of marginal?
It's not great, and I'll tell you what. I'll keep you on, Joe, after the break. Stay on the line. We'll talk more about Western Refining, but the volume does not look good. But we'll talk about that when we come back. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Now we have our winner, William Lorman from Wilmington, Mass. William, thank you so much. Congratulations.
Hi, Tom. Thank you very much.
It's a beautiful thing, man.
Oh, we've got Jason Spears. Congratulations. You are the winner of the Great Panther Silver Giveaway here at TFNN. I'm so pleased you called in. Made my day.
Well, thank you. Thank you very much.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Right now, we have our winner, Joe Picararo from Wakefield, Mass. Congratulations.
Oh, yeah. Hey, long-term fan. Listened a long time. So, yeah, big fan.
I know that voice, man. That's a beautiful thing. That's a beautiful thing, man.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Welcome back, folks. Ken Shreve with you. Breakout Investing on the TFNN Radio Network. We have Joe on the line from Boston talking about the volume in Western refining on the New York Stock Exchange, WNR. So, Joe, is this a stock that you're watching? Do you have you bought it recently? What's going on with it?
I was watching it since the 22nd, where it had some decent volume.
Right.
Right there. I kind of picked up on it there, and it looked like it was trying to form the right side of the base. So it's been kind of moving up here. And then I looked at it on a weekly, and it looks, like it's been consolidating for a good long time here.
Yeah, well, I mean, Western Refining's chart, especially its weekly chart, looks like a lot of charts in the market right now. Okay, it's cleared resistance over on the left side at 1950. Okay, so it recently took out its prior high, but if you look at the weekly volume, it's just getting lighter and lighter and lighter. Right. And then even on the daily chart, when you look at its recent price gains, it's up 7 days out of 8, something like that, and there's just been no volume at all behind the move. Right. And frankly, this is kind of a concern, Joe. I'm sure you'd agree with me. I mean, this is kind of the rule, not the exception in the market. There just really hasn't been a lot of volume. I mean, there have been some breakouts where there's been decent volume, but there have also been a big crop of breakouts recently where there hasn't been any volume at all. So I think this is a risky buy here. I've always found the refiners to be pretty tough, but it is a decent base. There's just no volume behind the recent gains, which tells me there's sort of a lack of conviction behind the buying.
Right. Now, can I ask you just a follow-up, a question on another one, the base that's forming? It kind of looks similar, but it's not at an all-time high. It's
sure.
SWN.
SWN, Southwestern Energy.
Yeah, it's like so it's not like in all-time high territory, but it's still like forming that type of pattern. What's your ruling on that when it's not like up at all-time highs? Does that negate the base?
No, not at all. No, I would say that this is a pretty healthy base. I mean, the issue with Southwestern Energy, I mean, this is a natural gas company. They do a lot of work in Arkansas, Oklahoma, Texas. But this base actually reminds me a little bit of Celgene's. It's a completely different industry. Celgene, a highly profitable biotech, but the charts are similar. I mean, this could yield a breakout. There's no question about it. The issue I have with Southwestern Energy, though, is the decelerating sales growth in recent quarters. First quarter profit fell 20%. It also posted year-over-year declining earnings growth in the fourth quarter as well. So I think in the oil and gas, in the exploration and production group where Southwestern Energy is, I could probably find 10 or 15 stocks with better fundamentals and maybe even better charts at this point. So while SWN could break out, I mean, technically it doesn't look bad, but I would probably look elsewhere in that group for better outperformance. All right, Joe?
Thank you, sir. All right,
thanks. Appreciate it. All right, Joe in Boston always has good questions. That's an important thing, though. Southwestern Energy, you may look at the weekly chart. Hey, let me go ahead and pull up Southwestern Energy here so we can take a look at it. At one point, this was a real high flyer, really firing on all cylinders in terms of earnings and sales growth, and then fundamentals deteriorated a little bit, but technically this one could still work. I'd just be watching for a good heavy volume breakout over $44.50, $45 a share, and it could work. But when I buy stocks for my Ultimate Growth Stocks model portfolio, I start with strong fundamentals. I don't like to see decelerating sales growth. I like to see good year-over-year sales increases. If it's accelerating sequentially, that's even better. And then I want to see earnings growth, 25, 50, 75, 100% year-over-year growth for several quarters in a row. You don't have that with Southwestern Energy, so this is not a stock that would be on my radar. That said, I think there are a lot of E&P firms, exploration and production firms out there that look pretty darn good right now, and with oil prices starting to move slightly higher, there may be some opportunities in the energy sector. In fact, I did initiate a position earlier today for Ultimate Growth Stocks in that sector. So we'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to tfnn.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Ken Shreve with you. Breakout Investing with Ken Shreve on the TFNN radio network. I wanted to take a quick look at Celgene, a highly profitable biotech. It's been kind of a sluggish price performer over the past year. Market cap of about $28.5 billion. But boy, this is a company that just quarter after quarter after quarter, you just see really fine bottom line and top line growth. In the first quarter, sales were up 42% year over year to just over $1.1 billion. Earnings up 32% year over year. Celgene is having a pretty decent day, kind of keeping up in line with the NASDAQ shares. Were recently up 1.6% to 61.52. They're going to be coming out with earnings towards the end of the month. Earnings are expected to be up 23% year over year to 85 cents a share. Sales up 31% to $1.1 billion. You can see technically it is looking pretty good here. I think this is a stock that really could try to make a breakout attempt over 61.70. It's really trading right around that buying area right now. But we just looked at Western Refining, a completely different industry group than Celgene. But this is a similar situation where weekly volume is just getting quieter and quieter and quieter, and you just haven't seen any volume behind this recent move in Celgene. And anytime you're buying a breakout, buying a stock when it clears a key resistance level, in Celgene's case 61.60, you want to see volume. And there have been numerous occasions in recent weeks of stocks that are breaking out, but there just hasn't been any volume behind the move. So I mentioned a couple segments ago I wanted to take a look at 3 earnings reports, and we didn't get a chance to do that, so I wanted to take a look at Helen of Troy. This is a little-known company, but sure has made a big price move, and the numbers the company reported earlier today were very good. Shares were recently trading around $36.65, up nearly 3%. Company distributes brand name consumer products, operates through 2 segments, personal care and housewares. Earnings up 32% year over year to 78 cents a share. Revenue up 70% year over year to $271.5 million. That was well ahead of expectations. You can see that the chart here, it has made a big move. The stock broke out right over here, cleared resistance at, that's a 33.63 price level. At 36.61, again, you're going to hear me mention this a lot on my show. As a growth investor, you do not want to chase extended stocks. This is an example of an extended stock. So even though the numbers were good, buying up here is risky. It's about 10% past the last buying area, again, around 33.63. Now, you could get another entry point in Helen of Troy. I think think at some point this broad market is going to pull back. Hopefully it's a mild, short-lived pullback where volume is light. That remains to be seen. But if the broad market pulls back, recent breakouts like Helen of Troy are going to pull back as well. And if you can get low volume behind the breakout, maybe down 2%, 3%, 4% off the recent highs, you could get new entry points in a lot of these stocks that have made big moves in recent weeks. So can't say that Helen of Troy is buyable right now, but if we get a pullback in the market, you could see another entry point here. Also wanted to take a look at high-tech Pharmacal. This is a generic drug maker, and we'll take a look at the weekly chart here. High-tech Pharmacal also had really strong numbers. Earnings up 100% year over year to $1.08 a share. Sales up 45% to $57.2 million. Those results were well ahead of expectations as well. Again, High-tech is a generic drug maker. Outstanding fundamentals. High-tech. You see the weekly chart, it doesn't look that good. It's kind of down near its low for the week, but this is a stock that recently broke out over 29.17. It's trading right around that buying area right now, 29.36. So this is an example of a stock that is not extended. Looking at this weekly price bar here, though, it does give me some reason for pause. Typically when a stock is trying to break out in heavy volume, you don't want to see it trading near its weekly low. It should be up near its high. That's a sign of strong demand for shares. And finally, in earnings today, let's take a look at Price Smart. PSMT on the NASDAQ. Again, we'll look at a weekly chart here. This is another example of a stock that you just don't want to chase here. Okay, there's a lot of momentum stocks out there that have been moving in recent weeks. They can make you a lot of money, but you have to know when to buy them, and that's the education that I provide in my Ultimate Growth Stocks model portfolio. Teach people how to buy the stocks at the right time. Teach people how to avoid extended growth names. Price Smart is another example of an extended stock. Recently broke out over 47.80 right in this area here at 60.42. Obviously very extended in price. Now, if Price Smart starts to move sideways, starts to flash some tight weekly closes where it really doesn't give up any ground, that would be very bullish price action. It would indicate good support for shares at current levels, and you could see another entry point. Earnings at Price Smart, very solid. Earnings up 28% year over year to 51 cents a share. Sales up 24% to $431.1 million. So three really strong earnings reports earlier today. Also wanted to take a look at Apple. This is a stock that I haven't really spoken that kindly about in recent weeks, but you have to give Apple credit. It has started to come back to life. Shares up 1.6% today to $357.36. Obviously, there are growing competition concerns out there for Apple, but you can see here what I did was I drew a descending trend line where I basically connected the recent highs in Apple. You can see that Apple did show a technical sign of strength. It broke above that descending trend line. Volume, hasn't been great, but it hasn't been bad either. There has been some a couple of days where volume was slightly above average, so that's a positive. Again, I'm just talking during its recent 4 or 5 session winning streak. So Apple showing signs of life. There could be some optimism about this company's earnings. I don't think there's any question it's gonna have another slam dunk quarter. The estimate is for earnings to rise 62% year over year to $5.70 a share. Sales up 57% to $24.7 billion. Remember, Apple has a market cap now, huge market cap of about $331 billion. I mean, for a company to be delivering quarterly growth like that is still amazing to me. Also amazing that it's only selling at 21 times trailing earnings and 12 times forward earnings. So shares of Apple coming back to life. We could see a breakout here, but again, I've talked about Apple in the past as being a late-stage base. In other words, it's made a huge price move over the past couple of years. So we'll see how it plays out, and we'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you. Breakout Investing on the TFNN Radio Network. I think we have Tom on the line from Tampa. Wanted to talk VXX. Tom, how are you?
Right. How you doing, Ken? Good.
What's happening? Yes, I can.
Hey, doing all right. Getting pounded on here in Tampa with rain, but that's a good thing.
Yeah, that doesn't sound bad. So what's happening, Tom?
VXX, Ken.
That's the VXX, the exchange traded. It's actually not an exchange traded fund. It's an exchange traded note that corresponds to the performance of the VIX short-term futures index, right? VXX.
Yes, sir.
All right. So are you long, short? Do you own it? Want to buy it?
I'm looking at picking some of that. I just can't see this rally. I didn't get a chance to listen to you earlier, but I mean, what do you think? You think this rally is going to sustain itself, or you think we're going to get some kind of a pullback here?
Well, I'm kind of hoping that we get a pullback, frankly, and I think the potential to sell the news tomorrow certainly exists. I think a lot of good news has been priced into this market very quickly. That being said, the Nasdaq and the S&P 500 I mentioned at the beginning of the show, Tom, are very close to breakout points. I mean, they're not far from their prior highs at all. So there's still some money, I think, that wants to come in from the sidelines. I'm not sure it will. I think it's probably going to wait for a little pullback. I think any pullback that we get is probably going to be short-lived, and I'm still expecting some strength into the end of the year. As far as the VXX, I mean, this is Tom. It's such a slow-moving investment vehicle. I mean, I think if you're bearish on the market, you'd be better off going for something like the QID, the double inverse to the Nasdaq 100. Even if you're right with the VXX, it really doesn't go up that much, and if you're wrong, it really doesn't go down that much. It's just kind of a flatlining. I just don't see much upside here. I think that you could probably find better ways to play weakness in the broad market.
Okay. All right, I'll take a look at that QID. Okay.
All right, Tom, I appreciate the call.
Hey, thanks, Jim.
All right, take care. All right, Tom, asking about the VXX. I mean, if you look at pull back a weekly chart of the VXX, you can see it obviously has been in a downtrend for quite some time. And again, I think if you're bearish the market, you're going to want to wait for some institutional selling, first of all, in the market before you turn too bearish. You're going to want to see breakdowns in a lot of these leaders that have broken out over the past few weeks or so. I think it's still a dangerous market to be short. But let's see how the market responds to the jobs report tomorrow. I think a key mistake investors make is they go short too early. They go short they don't think the market can go up any higher, and then the market does what they don't expect it to do. So can we break out to new highs? Absolutely. I mean, there's no question about it. We've been rallying in low volume on the Nasdaq, on the New York Stock Exchange. Typically, that's not a good sign. It makes for a weak foundation. But if there is money that starts to move into the sidelines, move in from the sidelines, certainly a breakout to new highs for the Nasdaq and the S&P 500. Not out of the question by any means. So that's my take on the VIX. And also wanted to mention, folks, Tiger Dollars. This has been a popular promotion at TFNN.com. Pay $300, receive $350 in Tiger Dollars. It's basically a 15% match. Pay $500, receive $600 Tiger Dollars that can be used for any product at TFNN.com. You can also use Tiger Dollars to pay for Tiger Trading Track. That's Tiger University's first comprehensive educational program. For a $500 Tiger Dollar subscription, you'll have access to all of the webinars that are part of the Tiger Trading Track for 1 year, but you have to order by July 15th to take advantage of that. Don't forget to get a free trial to Ultimate Growth Stocks as well, right on the homepage of TFNN.com. Have a great afternoon. Let's hope for a good jobs number tomorrow. We'll talk to you next week, folks.
Great.